Hey, on if you want daily rates, Harrison's been sending it to me on a daily basis in the morning. He's like a reliable delivery guy.
That's
So make sure you take him up on it and use it.
all right.
I,
The
I
other
was
thing,
I'm,
we're
I'm
doing the
impressed.
research.
I'm impressed, Harrison. I would have been the guy that made you like one and sent it to you one time and I kind of forgot about it. But man, you're good.
I mean, I send it out to like four of the folks, so
I,
yeah,
I
you're not
love
the only
it. You're
one.
so reliable.
Yeah.
Okay, I think this is it. I'm just going to go ahead and get started. For those of you who don't know me, I'm C. I'm one of the originators here. And the reason why I'm talking and not someone else is because Ragner's out. I did close a mobile home back in May, and he wanted me to share the experience with you guys. So this will not take too long. I'm just going to go over it really quickly. But for those of you who are new to the industry or have never done a mobile home before, just to kind of share a quick story. When I started originating loans, I worked for a major bank. And I will tell you this, the B of A's, Chase, Wells Fargo, Citibank, they do not finance mobile homes. Okay. So just a quick definition. A mobile home is a structure, right? We all see what a mobile home looks like, and it is not permanently affixed to the foundation. Okay. In fact, if you walk into a mobile home park and you will see underneath the building, there's usually vents. And if you look through the vents really carefully, you're going to see some type of a wheel or a post or a pier that's actually propping up the property. And this tells you that someone could literally take this mobile home, the structure, and move it somewhere else very easily. Okay. And because of that, it is not considered a real estate property, a real estate transaction. Okay. So single family homes, condos, townhomes, okay, common sense. You can't just lift it up and take it somewhere else because it's permanently affixed to the foundation. So this is the slight difference that makes a mobile home transaction different than a real estate transaction. Everybody with me so far? Yes? Okay, good. Okay, so this particular this is important. So pay attention to this part. So this particular transaction that I had, this property was in escrow twice prior to me getting involved. Okay. Both times it fell out. Why did it fall out? Because a mobile home will still show up on Redfin or Zillow or Realtor.com. Okay. And for an inexperienced loan officer, they just think it's a manufactured home and they can finance it. It's not a manufactured home. Okay. So don't let the fact that because you're on a real estate site and you see a mobile home being listed, that it's a real estate transaction. Most of the time, especially in our area, it's not. It's in a mobile home park and it doesn't qualify for manufacturer financing. Okay, so we are very fortunate here at Giving Tree to be able to have access to Triad Financial, which is the lender who we use for mobile homes. They're really easy to work with, and the process is actually really simple. Okay, everything else, the shopping experience, the interaction with the agents, all that stuff is all the same. Okay, so your agent's still going to go out there, show the home, negotiate with the listing agent, all that great stuff. That's all the same. None of that changes. In fact, the purchase, the RPA, the purchase agreement is exactly the same form as they would use for any other property. Okay. Um, the appraisal process is also just very similar. So in my scenario, the purchase price was $295,000. It's not much. Okay. The minimum down payment is 5%. And once again, because this is not a real estate transaction, we're not going through traditional channels. There's no mortgage insurance, no PMI. Okay. It just, based on your down payment, based on your FICO score, and I'll show you that. I'll show you guys that in a second. You just get one fixed rate. Okay. And the rate's good for 90 days. So super simple, 295 purchase price, 5% down, which means down payment is only like 14,750. It is on a 25-year term, and the interest rate is 8.3%. Okay, so yes, the rate is higher than a traditional mortgage. I get that, but the purchase price of a mobile home is obviously going to be a lot less than a traditional property. Okay, so me personally, I get a lot of people calling me about mobile homes. I think a lot of potential home buyers who want to own, they're sort of shifting towards that direction because it's obviously more affordable. Okay, so just keep that in mind. But more importantly, know that here at GivingTree, we are able to finance mobile homes. And I always tell, this is the way I pitch it to agents is there's not many. We're probably one of a handful that are actually mortgage brokers who are actually able to finance mobile homes. Okay, so the maximum debt to income ratio is 50%. Okay, just standard. Now with mobile homes, there's one difference. The buyers also have to qualify with the mobile home park. And here's the reason. It's a mobile home park. The property is not permanently fixed to the foundation. They don't own the land. They own the structure itself. Okay. The land is owned by the mobile home park. So there's going to be a monthly lease fee, or we call it parking fee, spot fee. There's different terms, but it all means the same thing. In this particular case, the monthly lease fee is $1,562. Okay. Most mobile home parks will have some type of a stipulation. In addition to qualifying for a loan to purchase a structure, the mobile home park itself will have to ensure that you have sufficient income, in my case, to cover at least 2 times of the monthly park fee. So in my case, my borrowers needed to have a combined income of $3,124. Okay, so the mobile home park, it's like, okay, cool, you could qualify for the financing of the structure, but we need to make sure that you could pay for the monthly lease fee as well. Okay, so just keep that in mind. You know, if you do come across a buyer who's interested in buying a mobile home, most agents who have not dealt with it will not understand that this is a necessary process. So this kind of just, you know, gives you a little bit more credibility if you could let them know up front, hey, by the way, you're going to have to qualify the mobile home park too, just to ensure you can cover the monthly lease. Okay, so that's that. Any questions so far? Okay. The cool thing about this, so keep in mind, it's 5% down. Luckily for us, the appraised value came in at asking price, or the contract price of $295. One unique thing about a mobile home, and especially using Triad Financial, is that if the value comes in at purchase price, the buyer is able to roll in all of their closing costs. So in the regular world, we can't do that. Okay, you know, if you have a buyer who just can't come out of pocket with closing costs, they have to get a gift, they have to get a seller concession. Right? Agents are going to have to give them a credit, or lenders have to give them a credit or something to make it work. With a mobile home, even at 5%, because it came in at value, we rolled in all of the closing costs, which was just even better for the buyer. Right? So also keep that in mind as well.